Hey, this is Courtney Carroll coming to you guys live. Welcome to another session of Mortgages with Courtney. Today's topic is a really good one, and it's a question that I've been asked on Facebook, on Instagram by a number of individuals. So I thought it was very important that I bring it to light here today. That question simply is, how do mortgage broker agents get paid? It's a question that is extremely valid, and so today I'm going to peel back the curtains and share with you how we get compensated as individuals in the field. Before we get there, however, I want to remind you to please like, share, and subscribe to this channel and help us grow and get this information out there in front of the people that really could benefit from the information. If this is your first time visiting this channel, you might find value in the video I posted last week. It outlines the 5 reasons why I believe working with a broker would be of benefit to you. Please take a look in the link below and check that out after this video. So let's jump into today's topic. Again, how do broker agents get paid? In this industry, we get paid not by you, but we get paid by the lenders. So let's just make sure everyone understands that. In my last video, I said we work for you, the client. We don't work for any one particular lender, but we do get paid for the lender. So this is how it works. If I'm arranging a mortgage for you, let's assume that you are buying your first property. And let's assume right now that you have a high ratio. High ratio means simply that you are putting down less than 20% into the down payment for that property. So let's use 100,000 just as an easy number to work with. Your purchase price is $100,000. That's the cost of the property. You are coming in with 5% down. That would mean you have to find from your own resources $5,000, which represents 5% of $100,000 for the financing. So that's the down payment side. Now, when we take that, that is considered to be a high ratio. High ratio means the loan to value is greater than 80%. What do we mean by loan to value? Your loan is 95% of the outstanding value of the asset. And because it's so high, it's considered a high ratio mortgage. Anything that is 80% or less is called a conventional loan. So those are 2 terms that you often hear in the market, high ratio and conventional. So now that we have a better understanding of conventional and high ratio mortgage, let's dive into how we get compensated on these products. I'm working with an individual. They want a high ratio mortgage. They have a $100,000 purchase on a house and they've got that 5,000 or 5% that I spoke of. Now, when I put everything together, the individual has great credit. They have a provable income that shows that they can manage the outstanding debts, and their credit scores line up. Everything is wonderful. Their credit score is 680 and above. They reach the GDS TDS ratios of 39 max and 44 max with a AAA lender, and they've got credible sources of income. So I can take them to pretty much any lender because the lenders say as long as they've got these things in place, they meet our qualifications and we can lend them on that. Now, the lender is going to compensate me, the broker, for bringing them a new client. It's called a finder's fee, and different lenders have different finder's fees, and this is how agents like myself get paid. Now, the finder's fee that agents are paid will vary from one institution to the next, but typically they vary from 75 bips to 115 bips. And that also depends on the volume that agents bring into certain institutions. So what do I mean by bips? Bips is another way of saying basis points. I'm going to go back to the example we used looking at a $100,000 mortgage. Let's assume the mortgage outstanding on the loan is $100,000. That's after all your down payment, all the insurance premiums charged on your debt. You owe $100,000 to the bank. It's a 5-year term for 25-year amortization, and let's assume it's a variable rate mortgage that you have. So I owe $100,000 to the bank. The bank is going to compensate the brokerage house a finder's fee of 100 bips. We're going to use 100 bips just to make the math simple. So for every 100,000 of mortgage outstanding that we're bringing to them with a new client, we are going to be compensated 100 bips. That translates into $1,000 for that deal. Now, that $1,000 doesn't come to the agent. That is paid from the bank after everything is closed with the lawyers back to the brokerage house. Now, depending on the brokerage house you're working for and the compensation structure that the brokerage house and the agent has in place, that will determine what the agent gets. And when you're starting off in the business, when I first started looking at different companies, there are companies out there that pay you about 60% commission, right, for the first 5 or 7 deals that you close. So let's take a look at that. For that $100,000 mortgage, our brokerages are paid $1,000. If I'm getting 60% commission, it means I get $600 for the work that I did putting that deal together. So why would the bank pay us that money? Well, we are bringing new clients to the bank, individuals that the bank would not have had the opportunity to bring in on their own, or possibly lose them by that individual going to a separate competitive lender. So the bank says, for all the money that we're going to make over the life of this mortgage with this new client, we're willing to compensate you for finding this client for us. Now, each bank has their own mortgage originator team, individuals that work for Scotia that can go out and do mortgages. People come in off the streets to find mortgages with Scotia. So they don't have to pay a lot to the agents, but they do give us some compensation because they know in the long run, they're going to make hundreds of thousands of dollars off the interest on those loans. So that's how agents get compensated. So that's on a high ratio mortgage. It's also on conventional deals that can line up with an A lender. So what happens if you don't have an A-side deal? What happens if you're with an alternate lender? Now, in the alternate lender space, it means you're coming out of pocket with 20% down. It's no longer high ratio. You can't finance it through a AAA side, either because you've got some credit issues. Maybe you've had a past delinquency on a debt. Maybe your ratios don't line up. Maybe it's not 39-44 as we've talked about. Maybe yours is a little bit outside of the box. But some lenders on the alternate side are willing to be flexible on certain things. And so they will give you a mortgage on the alternative side. So as an agent, we are not getting a finder's fee for bringing clients to the alt side to get deals closed. In fact, on the alt side, those lenders are taking greater risk because they're expanding their ratios to get people into the mortgage business. They're taking some risk based on the credit history of those individuals. Yes, the individual has more money down, but alt side is not going to pay us a finder's fee. What they will do is they will charge a lender fee to the borrower. So in the same situation, I'm going to use that $100,000 as our starting point. When you take a mortgage to the alt side, that $100,000 mortgage outstanding as far as the loan is, now the lenders on the alt side are going to charge the borrower 1%. That's 100 basis point for arranging the loan. So that 100,000 becomes 101,000. That $1,000 is charged directly to the borrower. Now, when the lender gets this, they're going to split that with me, the agent. Yes, I'm getting compensated from them, but it would be not the same as if I was getting compensated on the A side with a finder's fee. So the difference is a lender fee and a finder fee. A finder fee is paid by the AAA banks. They're saying, thank you for bringing business to us. We're going to compensate you based on that, right? It's a AAA lender. We can do the deal. No problems. Credit's good. Income is good. GDS, TDS lines up. On the alt side, because there's some differences with how we do the deal, they're going to charge the borrower a lender fee, different from a finder's fee, and that's the difference in how we get compensated. So what happens in the case of a very complex file that I've got on the alt side? And I'm really putting a lot of time and effort into this. Maybe it's taking me 6 or 7 weeks to put this file together to find the right lender that will assist this person in getting their financing. Can I, as a broker agent, charge them additional fees? on top of the lender fees that the lenders are going to charge? And the answer is yes. As again, the lender fee is always going to be around 1% depending on, what this client is coming with. Some lenders will charge 2%, and it all depends on the creditworthiness of the client, whether or not they've had bankruptcies, and a number of other factors that we won't really get into. But I've spent 5-6 weeks. I know it's going to take me time to do this deal, to get this person financed. And I need to let the client know, listen, the lenders are going to charge a fee. Whether it's 1%, 2%, there is a fee for this. And the borrower knows that this is going to happen, but they need to get this financing done. And then I say, outside of that, I will be charging a fee because this is going to take me quite a considerable amount of time to work through this, to go to the different lenders, to make sure I put your story together so you can get this financing. And that is fine. The key here is to be very transparent and upfront with the client that this is a file that requires a little bit of massaging, a long time to process, and most clients understand that there is going to be compensation for work put in to get them the financing that they need. So this is how broker agents get compensated. On the A side, whether it's a conventional A side or a high ratio, the lenders will give you a finder's fee. And that finder's fee ranges from 75 bips to about 115 bips, again, depending on the lender that you're using. On the alternative side, you are not getting a finder's fee. They are charging a lender fee to the borrower. The borrower is responsible for paying that simply because the borrower does not qualify for the loan on the A side, and those lenders need to get compensated. They split the lender fee with the agent who brings the deal. So that is how we get paid. This has really been a wonderful, question that was brought to me, and I really wanted to bring some light to it because I think a lot of people are misinformed and think that every deal that an agent does for them, that they have to come out of pocket to pay. I hope this clarifies some of the confusion out there. Understand that agents like myself bring value to the marketplace. One of the great things that we do is we have you and your best interest at heart, and we walk you through the whole process of the mortgage financing, steps. So reach out to a broker near you, an agent near you. Don't be overwhelmed by the process because we're here to guide you and ensure that your deal gets funded successfully. And if it's not funded successfully, we can guide you in regards to what it is you need to do to make improvements so that future deals get closed, or we take it to a lender that has some different guidelines and still get your deal passed through for you. So once again, thank you for joining this platform. If you've not had a chance to see the last video, again, take a look at the link below in the description, and please like, share, and subscribe to the channel. If you found the content very informative, please make sure you're sharing it with others who can benefit from this. Courtney Carroll, Mortgages with Courtney. Have a great day.